Good evening, traders. Good evening. Hello, Unique. Well, today we can have a short class again, trying to make it 1 hour. But every time we do live trading, there's some students who are having difficulty with options. Some of them doesn't know which one to use, either call or puts, and the strike price and the expiration. So today we're going to go over that into more depth. I know we could all get this on YouTube, but some of us doesn't want to utilize YouTube. But so let me go ahead and be part of the YouTube instructor and help basically our community to know how to do options. Some of us are trading without knowing anything about options, but yet we still trade them. And some of us are asking Mary, should I get a call or should I get a put? Or what is the strike price? Or what is the expiration? What is the difference of the in the money, at the money, out of the money? So we're going to clarify all those uncertainty and we're going to discuss it tonight. Also, I'm going to add a basic knowledge of cash secured put and covered calls. And if you guys need more into depth to that, we have Tom. Tom and I actually teaches that class, so we could utilize that as well to serve as a passive income, because you know the cash secure puts, you could use it as a passive income. But there's a lot of more information about that for the what do you call it, a will strategy, right? But today was just going to be basic. Once we finish this class, and then we're going to go do the technicals, just go over some of the stocks. Tom, we just finished a class with Tom today, and I don't like this. No worry, Tom. Tom is actually is in the house, but unfortunately he is not available today. But it's okay, Tom. You're gonna have your own turn when you do your class for the cash secure put. This is just basically basic. And as for the technicals, we'll go over Intel because, again, the class that we did today for wheel strategy, I found INTC a little bit more interesting. So we could go over that, talk about that, talk about Nvidia as well. And let's see what we're going to come up with. Okay, it is 7:02. Good evening, traders. Please don't forget to press the like, comment below, and press the notification bell so you don't miss anything from Miss Mary. This is our technicals of Miss Mary. Yes, this is our community, small but tight-knit community, and hopefully in the future we will continue to grow. So your support will definitely help me grow this community. All right, let's start. Give me 1 second. I see a lot of familiar faces. Eddie, yes, Eddie. My favorite Eddie. Unique, yep. Raja, I see you guys. I know we are always here. We pretty much live here together, right? In YouTube and in the Discord. So to those people who are part of my YouTube channel, if you're not part of one of the greatest Discord in the world, yes, I know I might be exaggerating, but Josh's stocks with Josh Discord, I believe is one of the best Discord out there. Hands up on that. Okay. Give me 1 second. You guys could see my screen, I believe. All right. This is our class agenda. Options for buyers and sellers. Yes, there's two types of options. You're going to be either the buyers and the sellers. The buyers is more affordable compared to being a seller. Let's make it simple. When we say they are buying options, what does that mean? They're talking about purchasing a financial contract called an option. An option gives you the right, but not the obligation to buy or sell an asset, usually a stocks, at a specific price called what? The strike price, before the certain date, which is the expiration date. Options gives the buyer the right, but not the obligation to buy or sell an asset at a set price within a time frame. So we don't have the obligation to own that particular stocks. We're just getting the right. So it becomes more affordable for us. Let's say we're going to buy one SPY. How much does that cost? Sometimes $90 to $150. But let me see if I could be able to see my face. Hold on, guys. I'm working on this. All right. I guess I did something. I'm still working on Ecamm, by the way. Forget it. Oh, I'm so sorry, guys. I'm still working on this. How do you do that? Oh, jeez. What is going on? Can you guys see my screen? I'm so sorry. Entire screen. Exit. Technical difficulties. Oh no. There you go. Hold on. Hold on, guys. I know I'm still working on this. I'm still working on it. There you go. My apology. All right. Type of options. We have the call options. This is being a buyer. And we have the put options. When you say call options is the right to buy a stock at a set price. So if you believe the stock will go up, you go ahead and buy a call. Okay, you buy a call. When you believe the stock is going down, you have the rights to sell a stock at a set price, means you're going to buy put. If the price is going up, if SPY is going up, we get a call. If the SPY is going down, we get a put. Next one, let's get ready for the options. Learning the Greek. This is the most basic Greek that we possibly just need to know. We don't need a lot of Greek, but this is the most common one. And also, let's see how this thing works. The delta. Everybody knows about the delta. This is how much an options price changes when the stock price moves by $1 in either direction. What does that mean? If a stock, you're going for a call and the stock moves $1, your delta is in your favor. So for example, you choose a delta with 53.53, which is 53 cents. That is equals to $53. And every dollar move, you will receive $53. However, when the stock pulls back, you loses value on your delta. And not just the delta. Here comes your gamma, your theta, and your vega. It's the same way in the opposite direction. If it goes up, not only your delta is in your favor, your gamma and your vega is also in your favor. It's adding more premium to your delta. That's why when I say let's go ahead and take profit when there's a strength, because all your Greek is in your favor. If it pulls back and you wait for the real top level of resistance or to take profit, you loses value because of that pulling back, especially when it starts vacillating. Or what is vacillating means when the stock moves up to the resistance and push it down to the support, touching your resistance and your support, vacillating up and down. That is no bueno for your options. Delta doesn't care about direction. It just measures sensitivity. If the stocks moves the wrong way, delta pushes your options value down. So let's pretend the stocks went up to $100 and it pulls back to 95 and it's slowly climbing up to 100. By the time that it reaches to 100, the original profit from the previous move of 100 take profit level is now different after it pulls back. Because of what? Because your delta loses its value. And sometimes you have to reach higher or get to a second level for you to be profitable because of that delta losing its value. Your gamma. Gamma tells you how fast delta changes as a stock price moves. It tracks delta speed. I call it a booster for delta. So every dollar, the gamma will tell the delta, say, hey, every time you move a dollar, I'll give you 2 cents more. So, but like I said, if your options becomes less responsive to rebounds, if that trade goes against you, guess what? Your booster also take away some of your premium of your delta. Okay, everything goes against you. So gamma is like delta. You move a dollar, I give you more 2 cents. Here comes your theta, everybody's favorite. If you're a buyer, nobody likes theta. If you're a seller, this is one of your best friend. Because if you're a seller, you prefer your options to expires worthless, and theta is in your favor if you are a seller. But if you are a buyer, like every time we scalp SPY or Tesla or AMD, whatever that is that we're doing in the morning, we are a buyer. And theta is not our friend. Theta measures how much value an option loses each day as it gets closer to expiration. It's also called as a time decay. So when you buy a SPY, for example, and it's currently 11 o'clock, and you choose a 0 DTE, the good thing about that is the premium tends to be interesting because it's affordable. Your expiration for one day is a little bit expensive, meaning the premium is higher compared to having 0 DTE. However, if that pulls back, your 0 DTE, meaning your today's expiration, will lose value faster compared to your one day expiration because of your theta. And also, what is it again? Your gamma, your delta losing its value. All those Greek goes against you. Your vega indicates an option's price changes when the stock's volatility increases or decreases, also known as the volatility sensitivity. This is similar to your implied volatility. The one who has a higher vega is always what? Stocks like Tesla, because Tesla could fluctuate or it could move from $10 and goes back down again another $10, right? So those type of stocks has a higher vega. But if it goes to your favor, guess what it does to your delta? It adds more value. Okay, I hope that is pretty simple and easy to understand. Now let's go ahead and clarify more on the calls and the puts. Being in the money. Mary, what is being in the money? I have a call. Okay. For example, the price is $100. You can buy in the money at 95, having $5 intrinsic value, while the stock is $100 currently. You're already profitable in a way that's part of profitable because it's your premium. You pay higher premium for being in the money. Okay, so you have a buffer of $5. You have an intrinsic value in case the stocks fluctuates from 100 to 99, 96. Hopefully it doesn't touch that 95. If it does, obviously you loses more value. But if it fluctuates within that range, you have that $5 buffer. When it push higher, your delta doesn't lose much value compared to being out of the money or at the money. Okay, so in the money, your strike price is lower than the market price. Once again, in the money, the strike price is lower than the market price. The only thing with this is your in the money has higher premium, but has an intrinsic value. Mary, what is an intrinsic value? The difference between the $100 and to your strike price of 95, you have $5 intrinsic value, which serves as a buffer. Out of the money, for a call, the strike price is higher than the market price. So you pay $100 for a stock that's worth, $105 for a stock that's worth $100. So you're not profitable yet because there's no intrinsic value. And the good thing about being out of the money, it's more affordable, cheaper compared to you're in the money. That's why most of the traders prefer out of the money, is because especially if there is a trend and you could see a favorable trend, let's say you go into the upside and the trend is very strong, most of them who are aggressive traders, they use out of the money because when it's moved to their favor, they could get a lot of contract and obviously they could get more money as well because they could purchase more contracts compared to being in the money. At the money, is similar as the market price. Your strike price and the price matches whatever the market price is. Let's say it's $100, you buy at the money $100, and there's no intrinsic value with that. As for the puts, similar but opposite now. It's the opposite direction. In the money, what happened? A lot of people get confused about in the money for the puts. Remember, in the money for the puts, the strike price is above the market price. So, for example, if the stock is currently 100, you're now going to buy 105 being in the money. Okay, so the current price is 100 and you expect the price to go down to 99, 98, 97, but you already have an intrinsic value of 105 in case this $100 pulls back to 101, 102. Hopefully it will not touch your 105. It keeps saying you're already profitable. You already paid for your premium with a higher premium, okay? Having $5 intrinsic value, similar to the calls, but we're just going to the opposite direction at this time. Out of the money, strike price is below market price. So the current price is 100. Out of the money is 95. So what does that mean? It means that you're not profitable yet. There's no intrinsic value. Your stocks has to come down all the way to $95 to actually start making money as well. But even if it doesn't reach your $95, although you have an out of the money, as long as the trend goes to your favor, you could still make money. It doesn't have to reach that $95, okay? But the difference between this and this, your delta has higher in the money compared to out of the money. Out of the money has lower delta. And remember, your delta is important for what? Because that's how much your profit is going to be calculated, right? Your delta, if your out of the money is 25 cents, but your contract is cheaper. In the money, your delta could be like 50 cents or 60 cents compared to the out of the money, but your premium is way higher than out of the money. You could purchase a lot of out of the money because it's cheaper. Well, those people who has deeper pockets. Being expensive and cheaper is actually subjective. But what I'm trying to say is out of the money is more affordable. You could purchase a lot of contracts compared to in the money. At the money, same thing. Strike price and price match, no intrinsic value. This is way cheaper than at the money. This is higher premium, cheaper. It's okay. It's not so bad. It's between the in the money and out of the money, okay, in regards to the price. What about volume? A lot of people get confused on my volume. Mary, I cannot sell my options. Okay, let's talk about it. In options trading, volume is important for liquidity. High volume means there's good liquidity, higher liquidity, making it easier to buy and sell on options without affecting its price too much. Why do we pick SPY all the time? Is because SPY has high liquidity. Why do we use Tesla or Nvidia, the Magnificent Seven? Because of their high liquidity. We could be able to buy and sell our options quickly, right? There's no big gap. It also shows strong interest, which can also hint a potential market movement. Yes, if you see like unusual whale or unusual volumes, interest, open interest or things like that, something's going on. There's like a potential market movement on that particular strike price. Okay, so volume is really important, especially if you guys are doing leap or skip. You need to make sure that you're choosing an expiration and a strike price, an expiration that has volume. Without volume, if you pick like one or two, it's going to be you and somebody else. When to try to sell it, what if that person doesn't accept yours? It's just you and him or her. So always pick a lot of volume. The more volume it is, the better. Low volume, however, means poor liquidity, making it harder and more costly to trade. It's hard to sell if you have low volume. You're going to see a big, wider. It can also lead to a wider bid-ask spreads and making it harder to execute at desired price. This happens mostly, let's say you have an ETF or you have, same thing with your leap and skip, right? Most of the time you have like a wider bid and ask spreads because of the liquidity. So just keep that in mind every time, not only for the leap and skip. Keep in mind when you do like a long calls or or a put and your expiration is 1 week or two. Don't worry about the 1 week. Most of the time you have good volume on those 1 week. Let's say like 3 months or 6 months. Keep in mind that volume is important. Okay, choose the one that has higher volume. Mary, what is higher volume means? Well, sometimes it's kind of subjective because we want it to have at least like, 500 to 1,000. But there are times that the volume that we choose or the stocks that we're choosing, we only have like 100, especially those penny stocks. I know you guys could still do a long skip and a long leap for those penny stocks, and sometimes you'll see a wider bid ask spreads because there's no volume. Okay, and not all stocks has options as well. Okay, watching volume helps you understand how easily you can trade and spot an opportunity. Everything's okay? Easy peasy so far? All right, cash secured puts. Oh, sorry. Let's go back. Cash secured puts and covered calls. We just finished a wheel strategy with Tom today. I'm going to go over a basic of selling a cash secured puts. And if you're interested to find out what is that strategy, that wheel strategy, don't forget to sign up with Tom. He will definitely help you. Right, Tom? Tom, don't forget to put your email in there just in case people wants to sign up for your class. Okay, selling a cash secured puts. When you sell a cash secured puts, it doesn't mean that you own the shares. Not yet. But you will collect a premium upfront. You choose the stocks that you want to own, and you must have enough cash to buy that 100 shares if it get assigned. Your brokerage will hold that capital, by the way, on your brokerage will hold that. If you're going to sell a cash secured puts, if you don't have enough money or margin or capital on your brokerage, you will not be able to sell a cash secured puts. Because what are you trying to do here is you're waiting for the stocks at the lower price of your choice, and you buy it if you ever get assigned. Okay, but when you sell a cash secured puts, you don't own the shares yet. You're actually waiting for the stock's price to reach or reach to your level of your choice to purchase it. Once it reaches your level, then that's when you get assigned and you get to buy that 100 shares. Okay. However, while you're waiting, you are collecting premium up front. Okay. You collect premium up front. So you have to make sure you choose the stocks that you want. If the stock stays above the strike price, guess what happened? Your put expires worthless. That's why your theta is your friend. You want your positions to expires worthless. You want your stocks, your options to expires worthless. You get to keep the premium. However, if the stock stays below the strike price, guess what? You get called away. And what happened when it gets called away? You get assigned. You have to purchase that 100 shares per your contract. Your brokerage will take away that money, that 100 shares per contract. Let's say you buy one contract. Remember, one contract equals to 100 shares. If you purchase two contracts, that will be equal to 200 shares. So one contract equals 100 shares. So be mindful about that. And be mindful when you're putting a position or an order, because you need to make sure that you are picking the correct terminology buying this cash secured puts. So if you're going for a cash secured puts, you need to make sure that you are choosing the puts and you sell to open. Okay, you sell to open for a put. Remember, you're a seller here. You are not a buyer. Next, you're selling a covered calls. Now, selling a covered calls, you also collect premium upfront, but at this time, you own 100 shares. In order for you to sell covered calls, you need to own 100 shares. Okay? And one contract equals to 100 shares. So if you have 100 shares, for example, on Netflix, you could be able to do a covered calls with one contract only because you only have 100 shares. You own the shares, you sell a covered call at a higher strike price. What does that mean? If let's say Netflix is at $80 and you want to sell this all the way to $120, depending also on if it's available, your strike price is available, by the way. There's more into depth to that. I'm just giving you guys the basic and simple knowledge on covered calls and cash secured puts. But for example, you have 100 shares right now and you want to sell it for let's say you buy at, what did I say, $80 and you sell it $120, right? So instead of you waiting and not collecting anything, you sell covered calls and then you collect premium. And when the strike price when the market hits that 120, there's a higher probability that your options will get assigned and you get to keep your premium plus your profit from $80 to $120. Okay. However, if Netflix continue to move higher than $120, more than $120, that's the only thing. You didn't get to ride that. You don't get to ride the uptrend. Okay. You are limited to that 120 expiration strike price. Excuse me. So you collect the premium up front. If the stock stays below the strike price, what happened? The call expires worthless. You still keep the premium and you keep your shares. You don't get assigned. If the strike price stays below, you get to keep your premium and you get to keep your shares. However, just like I said earlier, if the stock rises above the call price, your shares will get called away. You will get assigned and you need to sell them at a profit, which is there's nothing wrong selling a profit. It's not a sin. Okay, then when you become familiarized with your cash secured puts and covered calls, then learn how to do the wheel strategy. Wheel strategy is a good way to earn passive income. One is very good on this. Tom does this too. I do some of them too, but I'm not I don't have a lot of shares, so but I do wheel strategies as well. But Ertuan, you guys see Ertuan doing a lot. He has a lot of passive income using wheel strategies, and Tom could definitely help you learn your wheel strategies. Thank you. That is our options class for today. Let me go ahead and take a look at some of your questions just in case. Ooh, why do I do that all the time? Questions. I started my options journey selling options. Good job. Now I do both and I found the option selling is much safer. It is much safer, Hanny. And you don't really have to sit down there and watch your stocks and getting nervous about it. It's really a best way to do it. If you don't have the time to sit down and watch your stocks, selling options is the best way to go. It seems nice to have a female teaching. Miss Lou. Open interest. Yeah, I always recommend Miss Mary to anyone who wants to learn to trade. Yeah, thank you so much. Yes, we do have a lot of classes in the Discord. I provide a basic introductions beginners, but you could ask my students. Our beginners class is really not a beginner. It's more like beginner and intermediate. Um Since I took your beginners and scalp classes, I am much better trader. Thank you, Race. I recommended anyone looking into increase your knowledge. Thank you, Race. Um, Tuan, I have been telling everyone that since I switched over from my buy sell shares to selling covered calls, less pressure. It is easier to win. Yes, I agree with you. It's less pressure. Yeah, the selling strategies is real. I don't like covered calls. Why, Tim? Can you touch on rolling covered calls? Actually, you know who's really good? That's like I said, we do have a will strategy, and they teach you. I mean, not they, we. It's me and Tom. We teach you guys the how to roll it, and what is the terminology of that buying back. Tim is a master in selling cash secured puts. Good job. Look for his classes. 130. Tim? I don't know who's Tim. I love selling puts. Yep. Will this class be added to the Discord? Daniel, this is our Sunday class. Yes, this is our Sunday class. But the will strategies it was today. But I know we have another one coming up soon. Now, well, thank you guys for being here, by the way, and I appreciate your thumbs up. Let's go ahead and take a look at some shares now. This technicals for you guys. It's not that you need to have a lot of money to do covered calls. The thing with that is you have to own 100 shares. So, for example, you have 100 shares of SoFi, you could do covered calls. For example, you have a losing trade. I'm sorry, I don't mean to touch your sensitivity in there. If you have a losing trade and you have 100 shares, for example, let's say you bought 100 shares of UNH at 300, it's currently 280. That 100 shares, you could make it to work. Do a covered calls because you own 100 shares. So today, look at your entire portfolio. If you have 100 shares and it's losing, or even if it's not losing, if you have 100 shares and if you could be able to do covered calls, do it. Do it. Okay. I had one student, and me and Ertuan did a coaching with her. I'm not gonna disclose what's her name, and she enjoyed it. She loved it. She learned the way, and she's becomes more profitable. And she actually ended up teaching her friends how to do covered calls and selling secured puts. It's less stressful. It's much like calm. It's more calm, and you don't have to do anything. It just works for you. You do your covered calls, you have 100 shares. If it gets to your strike price, great, profit, you know? And if you're waiting for your stocks that you want to come down and you're planning to buy 100 shares of that, sell cash secured puts. While you're waiting, you're making money, right? You're making so that your time is gold, right? Time is money. So there you go. That's a good terminology for that. I do rolling almost every day. Yeah, you could roll it if your expiration is approaching and your strike price, especially your strike price is approaching, you could roll it. You could roll your options. Yeah, Airtwan does a lot of that. This type of trading is new to me. Yeah, Lulu. Just like I said, Lulu, this is a basic of cash secured puts. This is very passive. It's a passive income that you don't have to do much. You really don't have to do much, you know? And what is it? It's good for those people who doesn't enjoy the fast-paced scalping, you know? So tonight, Miss Laverne, look at your portfolio, and tomorrow's Monday. Perhaps you could do a covered calls, you know? Remember, you're going to be a seller, so you have to sell. And for covered calls, if you have the 100 shares, you're going to choose call and it's sell to open. If you are planning to purchase 100 shares of your favorite stocks, you're going to be a seller, but you're going to be press put and sell to open. If you need to close your position, you have to what? Sell to close. Okay. All your puts or your call, you have to sell to close. What is the risk? Okay. let's say if you're doing a cash secured put, right? The risk is if the stocks continue to dip and it's like a falling knife, just like that's the reason why you need to take the class too, because there's more into depth to that. The only risk on that is you will get assigned and you will lose money if the stocks continue to come down. If your support level is, let's say you buy a $20 stocks and you're waiting for example, APLD. Currently right now, APLD, if I'm not mistaken, is $27, right? You're $27 and you wanna purchase APLD at $23. So you're going to sell a cash secured puts, right? You're going to put and then sell to open. And then APLD went down to 20, but you put a $23 strike price, the brokerage, you will get assigned and the brokerage will take away that capital. Now, not only you have that shares, now you're losing. You're losing because the price went down to up to $20. That's the only risk that is associated with that. But you still collect premium even if you get assigned. Okay, they don't take that away from you. I own 100 of losing shares at different stocks. Can I sell options? Yeah, if you have 100 shares, for example, I don't know what is your losing trades, JV boys. Let's say you have, I don't know, give me your stocks. If you have 100 shares for that, and some stocks doesn't allow covered calls too. Okay, not all of them. Correction, if you're selling, you have to buy to close. When you're selling cash secured puts, wait, you buy, I'm so sorry. No, selling, when you're seller, Tuan, you sell to open, right? Cash call. That's how we do in Schwab. I don't know how do you guys do it on your, you have to buy to close. Correct me, Tom. Tom, I don't know if Thomas says, because in Schwab's I have to sell to open. I own 100 losing shares. Selling cash secured puts and covered calls 30 days out, enjoy the premium. Yeah, Raise, that is one way to do it as your passive income for wheel strategies. So it is buy to close then, huh? Let me just double check that. My apology, guys, because mine is, oh, for exiting. Okay, okay. Yes, 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 yes. That's right. I'm sorry. Yes, 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 unique. Yes, correct. When you're opening a position for a covered calls, you have to call and then you sell to open. And then when you sell, when you're trying to buy back or you close your positions, you are absolutely right, unique. You and Tuan, you need to make sure that you close it. You need to buy to close. That's correct because you're buying it back. My apology. Yes, you're buying it back. That's correct. Okay, so the terminologies could actually be a little bit confusing because you're buying it back. Okay, and when you buy back, most of the time you actually need to pay. Those days that they will pay you, but those times, so don't get confused in that as well. Okay, so there's a lot of details when it comes to doing cash secured puts and covered calls. So don't just start it without having some knowledge. So this is just the basic. So there's more into depth on how to do rolling in or buying back. Mary, what if it went down so deep, but my brokerage hasn't assigned me? Oh, when that strike price hits and your expiration hits, there's a higher probability that you're gonna get assigned. Okay, I have students that's emailing me and saying, Mary, I'm losing, and the brokerage hasn't taken my money yet. Oh, they're holding your capital. They will hold your capital, by the way. Okay, and I also have a students who ended up having that as a naked call, right, Tom? So there's a lot of things that you need to be careful too. Okay, so it sounds so simple, but just learn at least the risk, you know, study the strategy. But it becomes so easy as the time goes by. It becomes so easy. It's calmer, and you don't need to wear the depends anymore because it's not like scalping with me that we always have to right, doing that. But when you're doing this cash secured puts, your money's working for you. It's really cool. Try it. Need more information of that? Turtle Trader. He's in the house, so go ahead and reach out for that. Just realized you took the moniker of the mindful trade that was mentioned about a month ago and so ago. Yes, never trade naked before. Oh no. That could be you have to, okay, before you guys start branching out to those naked calls, I need you first to be familiarized with the buying options. Okay, once you guys become familiarized as a buyer, and then you guys could start with the cash secured puts and covered calls. Once you get better on those covered calls and cash secured puts, then you could do a will strategy. Once you get better on that, then you could branch out again. Okay? Because right now, the goal is one, you need to be connoisseur of one thing before you start branching out. I know it's part of trading, but if you're still struggling with scalping, and then now you want to learn more strategy, please, 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 let's first be focused. Not unless you're going to give up on your scalping and you're going to focus on the cash secured puts, which is a lot easier, by the way. It's a lot easier, it's less stressful, it's more calm, it's on your most of people's favor because you don't, just like I said, we don't have to do much at all, you know. Yeah, see, Tuan even suggests please don't do sell naked calls. Just like I said, there's also Condor, but don't worry about those. The most simplest options is being a buyers to buy calls and puts, and also cash secured puts and covered calls. Those are the most simpler option strategy that I suggest that you guys should learn. Okay, the rest is just a bit complicated. Don't make your life more complicated as it is. Make it simple. Simplicity is better. That's just me. Okay, you guys could have the knowledge of it, but I want you to get better at one thing before branching out. Okay, maybe perhaps starts with your swing, so that you don't have to worry about the cash secured puts or covered calls because your stocks is losing, right? So maybe perhaps learn swinging. By the way, we do have a swinging class on the 29th. That is your first swinging class with Miss Mary. I'm so happy. I'm excited. I hope I'm going to bring some good knowledge and make it more give you guys some nugget of wisdom, how to take your swing trade. It's totally different from scalping and swinging. Okay, scalping, you have to use a shorter time frame, 5 minutes. Your swing trading, 30 minutes, 1 hour. You look at the larger time frame for take profit level. Okay, my next scalping class is next scalping class. I actually have a calendar on the 28th, which is Saturday next week. The next It's not next week, I'm sorry. The 28th, the following week. Okay. Another announcement. I will not be able to do our Tuesday morning huddle for my YouTube channels, but I'm going to reschedule it. I was thinking of doing it for tomorrow. Unfortunately, I cannot. So we're going to do this on Friday. So our morning huddle tomorrow, I mean on Tuesday, will be rescheduled on Friday morning. I will make it available to my YouTube subscribers and also to the Discord, okay? All right, let's go ahead and take a look at some of our favorite stocks. Okay, we could start with, if you guys want to start with Nvidia, it's already here. Let me clean up my stock, let me take a look at this first, okay? This is the original video. We had that video. I did a video for Nvidia recently. We still haven't reached the bullish territory of the parallel channel. Instead, we ended up having a rejection candle. But this is an inverse hammer. And what is the inverse hammer? Rejections, right? Another rejection candle. This has been a respectable support or trend line for Nvidia. And the goal is to be above 186. it closes one day above 186, but the next day it just decided to change its mind, right? Oh, what is this? Let me just clean this up. Let me clean up my chart, guys, for you. And we have an evening star pattern here, which actually confirms the trade with this engulfing candle. This is an engulfing candle. So currently right now, retesting that 179. Yep, that 179 right here, which is happens to be half of this candle. And the next support, if it continues and we cannot hold above that 179, then we're gonna, these are local supports, okay? 176 to 175.56. So 176 to 174. These are local support, what I'm giving you guys, because these could be a support or resistance that you can utilize for your scalping. So currently right now, Nvidia is between the local support of 179, drop below that 179. We have 176 to 174. Okay, this is going to be your point of control for Nvidia, this daily candles on March 2nd. If we surpasses the resistance to the top, we still have to surpass that 186. That confirms the trade to the upside on that 189 all the way to that 194. I'm still looking at that 194 here, but we're still below the parallel channel. This is still on the bearish territory of the parallel channel. We want to be above on that channel to confirm the trade. And if we do see a candle that break out of that trend line, which is above 186, this is going to be your point of control. Okay, this massive bearish candle, remember, half of that is going to be a possible local resistance before reaching to the top of 194. Next, that is just a local support, okay, because we're using a shorter time frame. The weekly is still looking pretty good, by the way. It's still respecting the lower trend line of this. Let me go ahead and fix that. Mary, why are you cutting it like that? Well, it's just a bunch of trend lines that you're trying to see if this ever gonna break out of that, then we could definitely see the resistance reaching to that 208 to 213. Okay, we're just following the trend line because remember, two trend lines respect it. But Mary, it's not really a parallel channel because you have a fake out in there. I'm like, yeah, it does. You're right. We actually have an a head and shoulder, and this trend line here will serve as a critical point of support. So it could actually drop. This is going to be a pivotal point. So anything that drops below that trend line here could confirm our what pattern is this? Head and shoulder, right? And head and shoulder happens to be what? Bearish. So if we break down below, trying to be conservative, about 165 to 164 is a possible support. Drop below that, we have this massive candle here from 157, 158. And this was the most recent higher high after it rallied. I mean, yes, this one, but that's already invalidated. So this is going to be the key level of supports if it ever drops below that trend line to confirm your head and shoulder. So this will be your support 152 to 153 all the way to the body of that candle to that 148. Okay, but let's not worry about the supports. I'm just giving you guys a bearish scenario. Currently right now we do have a nice beautiful inverse hammer. Both of them are inverse hammer, a possible reversal. No confirmation yet that it will continue to go high. Our RSI is still a little bit struggling to go higher and push up and give us a bullish crossover. Right now we're just right above on the 50. Okay, your MACD is curling down but still in the bullish territory. Your monthly is still in the bullish territory on the RSI, okay? What I'm waiting for is really that weekly to give us a bullish crossover and not just a fake out, because this one did give us a bunch of fake out. This one, it tried. The second time it did, but it gives me a fake on the bullish crossover. Same thing with that. So we need to create a higher high. Even the RSI, we need to create a higher high. About confirmation is about 60. Okay, and daily, the daily is just giving us not a good one. This is your weekly and the monthly is bullish, but our daily is actually slightly bearish. Okay, we are in the bearish territory on this channel, and our RSI is still struggling to have the crossover and above 50, and it's still bearish. But look at your RSI. So every time it reaches this level close by, it just continues to reject that level of RSI is about 40. So you will not come down below 40. MACD still bearish. Let's go ahead and take a look at the MAs. Where is that MAs? Okay. So as you can see, we are pinned down. This is actually, we're getting compressed by the 50 and the 200. So sooner or later, we're going to see directions. We're going to see directions either break down below the 200 or break out of the 50 MAs. And we don't know where it's going, but just like I said, we need to pay attention to our 200 MAs. This is going to be a pivotal point for Nvidia. It could actually create a wick down all the way to that 170 and reject it. So always wait for a daily candle to finish before saying, oh Mary, we break down below the 200. We do want to see a candle. If we see a wick and right above the 200 MAs, is just a rejections of this support. Okay, this wick represents price action. However, if we ended up having a candle that is the body of the candle turns out to be below that 200, and then we could say, oh no, we have a candle that break down below the 200. So currently right now we are getting compressed by the 50 and the 200. So sooner or later excuse me, the sooner or later we're going to see directions. Okay, directions. Our volume is not much, nothing fancy. It's not picking up. It's just still below your 50 MAs. So it's just a matter, it's compressing. So it's just a matter of time that we're definitely going to see a move to the upside or move to the downside. Okay. We're just vacillating too, okay, for Nvidia. And we've been vacillating since what? Since November to March. We're just vacillating. What is vacillating means? We are under consolidation. What does that mean, Mary? Our resistance, when the price continue to reach the resistance, bounce, support, bounce, resistance, bounce, support, bounce. Okay, that is vacillation. That's consolidation. So with no directions yet, no directions to the upsides, no directions to the upside. But even on the micro trend right here, we are also under vacillations. We are under consolidation. So we are under a bigger consolidation, and we are under mini consolidation. So right here. But we could trade this. Anything that breaks out on that candle, remember that 186 is still valid, okay? That video that I created is still valid. And this is going to be our point of control or take profit when that 186 surpasses. And remember what I say, half of that candle will serve as a what? Resistance. And then the second one is we could be a put here just for a short. This is going to be maybe a possible scalp, by the way. So anything that drops below the 200 MAs, where's the resistance, where's the support? This is going to be your initial take profit. Okay, watch that for Nvidia tomorrow. Nothing's going on with Nvidia yet. My video is still valid for the technical analysis. The one that I want to talk about too is Intel. Intel is coming to be a little bit interesting. This is a monthly for Intel, okay? And as you can see, your RSI, it's not yours, it's ours, or the chart, it's showing on bullish, right? It's bullish, but what happened? For some reason, every time it reaches this level, it bounced back. And hopefully, history will not repeat itself, that it's going to bounce back. So what do? we use a trend line. This trend line will gauge where the candle will go. If we see anything that drops below that, then it means that there's a possibility it could go back and bounce back again and reject this level of RSI, and our candles will possibly retest this 200 MA, slice on that $34, $35, or it could push back higher and reach that resistance before touching, the top. Okay, so this will gauge where the candle will go. If we're going to pull back and back test that $34, 33, 30, 30, 35 to 33 is your monthly support. Or scenario could look like this too. Consolidation, we had a breakout candle, right? Establish a higher high. What does that mean? Changes of a structure from micro bearish to bullish, and then possible back test of the 200 if it breaks down this trend line. Okay, this trend line will be a pivotal point before testing, back test that trend line up again, and then retesting that resistance, maybe a little bit following the trend line before it shoots up. Or if that RSI fail to establish a higher high, then you could back test, reject that, retest here again, and maybe even join the bottom and then reach it again. Don't know. Okay, earnings is coming. That is such a big move to the downside, so I'm not quite sure if that's going to happen. Nothing is guaranteed, but I'm anticipating if we break down here, this is your next level of supports. Break down that next level of supports from 35 to 32. We have this level when we were vacillating back then, when it was just 19, and I was telling, last year, that Intel is pretty good for a long-term hold when it was just $19. So, okay, once again, use your trend line, drop below that trend line, you have the 200 and the 50 MAs, drop below the 50 MAs and 200, we have this level here, which is that 27, okay? 27, 26, could extend 24. So that's your scenario for that. Let's go ahead and take a look at the shorter time frame. That's just the monthly. And as you can see, this is still the weekly. What are we seeing? We have a we have a bearish divergence. It continued to create a bearish divergence. The price continued to go up. Your RSI continued to come down, but the bearish divergence is not confirmed yet. We continue to create a higher high, higher low, higher high, higher low, higher high, higher low. But bearish divergence not fully confirmed. There's no breakout of that trend line. Okay, no breakout of that trend line before reaching the these level. There is a local support on that $40 to 39. You could extend that 39 to 36 all the way to 35. Then you get that $31 retesting, because there's layers. It's like, this candles are like onions, right? A bunch of layers before reaching the bottom. And if we end up having a golden cross, what does that mean? When the 50 crosses above your 200, and then that means what? It's a bullish move. Okay, it's a bullish signal. Right now it's getting closer to that. And your 2 days respectable with the 50 MA. So it's still bullish. It's still bullish, right? A little bit of a struggle here with your RSI. We do need to confirm that bullish crossover. Right now, there's no trend. There's no trade yet. If we're going to buy this at this current level, we do have that $42. This will be a critical level. Just like I said, this trend line will tell us where Intel is going. Is it going to rebound from here and create a higher high again and get to that $54, 55, or we're going to break down that $41, $42 and back test that monthly support. Okay, so that's your scenario for Intel. So watch out for 2-day chart. Use your 50 MAs, or you could use the weekly, draw your trend line. And if this is being respected, if you're going to buy, because why? There's a pivotal change. I mean, there is a change of polarity. When the resistance becomes a support, that is a buying opportunity. Okay, so let's see if this is could be a buying opportunity. If we do buy on this level on the $42, we need to make sure we have a stop loss. The stop loss will be what? Right below your 50. So it's about 41 bucks. Or it could be 30, 39. Not unless if this is your long-term hold, you may need to DCA this all the way to that 31 bucks. So I prefer to wait for a possible rejections on this level. This is a nice looking candle, by the way. This is an engulfing candle. What does that mean? It could serve as a possible signal for a possible trend change. Okay, but buying at this level it makes sense. It makes sense. Is it confirmed yet? Not yet. We have a nice volume spiking nodes on your weekly. It's pretty good, more than above average, but we do want a candle that surpasses this level. I deleted the alert right here, so this is going to be my alert. I want a candle right above that 45. So buying at this level do make sense, but you do need to have a stop loss, because drop below this, drop below your trend line, gives you an opportunity to come down more to that 35, 36 to 31. Okay, right here, this one. All right, guys, it is precisely 7:59. I hope you guys enjoy our class. A golden cross is a technical analysis pattern occurring when a short-term moving average is typically 50 crosses the long-term moving averages. That is correct. It's bullish SC. A golden cross is a technical. Okay, yes, we got that. Sell it now for Nvidia for this Friday, or if only if you like the stocks on 70. I like that price. I like Nvidia right now too, but there's no trend. It's in the lower trend, and we still haven't established that bullish. We did not break that 186. It did give us 186 at some point. I actually did scalp it. I still have positions for Nvidia, but I think I'm losing 15% on that. So I'm okay. 15% is reasonable for me for my swing trading. So I'm okay. But if it drops below that level that I showed you guys on the consolidations, below that, then no confirmation, then that will be not a good way to hold on to your losing trade. Okay. As for the Microsoft dropped below 400. I don't know if you guys follow that technicals that we had. Below that 400, we'll get to 396, and that's exactly what we got. I hope you took advantage of that, because I did. If it continues to drop that 1949, was it 396? There's more level of supports that I was given to you guys. So watch that video again. It's on the channel. So that Microsoft, all the technicals that I've give last week, that I made, those videos, those technical analysis is still valid. Bearish divergence is a technical analysis pattern signaling a potential down. Yes, bearish divergence is a bearish signal that normally happens when your RSI is way overbought and it's screaming for help, saying, hey, we need to do pullback because I'm exhausted. Okay, and that bearish divergence, your bearish divergence on the RSI, it has to be on the overbought territory to make it valid, and you draw your trend line. Intel could pull back for an inverse head and shoulder pattern. I didn't see that yet. I only saw it this afternoon when I was doing class. I have Intel to watch due to the move of Fontex in computer chips. Nice. Yes. Yes, Tim. 174. Yes, SC. You could take my beginners class, SC. We go over those RSIs, those bullish divergence on the beginners class to give you more into depth and more information about those indicators. Remember, all indicators are lagging. You need to learn how to identify those bullish and bearish divergence on the RSIs faster than the indicator itself, because those days that I identify that bullish and bearish divergence already, and the indicator hasn't identified it yet. So it's always good to learn to identify those signal, because if you wait for your indicator to pop up, you already missed it. Okay, so that's why I said indicators are lagging. So don't depend on it. I mean, you could use it in conjunction with your resistance, with your EMA, but knowing to read those, those lines, oh, we see bearish divergence. It may not signal that right away because of your RSI being lagged or lagging, but if you know it, at least you already have a heads up. Hey, this trend is exhausting. Okay. All right, guys, thank you so much. Thank you for being here with me. I will see you on, I'll give you guys an update for our live trading. But remember, Tuesdays, I will not be here. But we'll go ahead and put it for Friday then. Our live trading will be Friday. We also have Thursdays live trading. But I'll give you guys an update on the Discord. When is that live trading? I do have my scalpers live trading. This scalping live trading is for my students who took my scalping class on Saturday. And we do have that live trading for them. So if you ever take my scalping class, you will also have a free live trading with me on Wednesday. That way you could utilize what you learned with me and you see if that strategy that I taught you really works. It should work, right? Because that's how we trade every morning using that strategy that I teach. Remember, to those people who took my scalping class, I hope you already emailed me because I will be sending you the recorded class today. I do have my live trading on Wednesdays for my scalpers, Thursdays, and I'm still contemplating if I could be able to move that live trading on Tuesday. But we'll go ahead and put that for Friday. Okay, so no live trading with me on Tuesday for the morning huddle, but we'll be here on Friday. If there's any modifications on regards to the time, I will give you guys announcements on the Discord or in the YouTube channel. Thank you guys. Just remember, always be kind, be patient. May all your trade be in the green. Have a great night, guys, and enjoy your night with your family. Thank you.